Bitcoin starts 2026 in the green. Walmart quietly moves crypto closer to Main Street. And the United States signals it may seize Bitcoin tied to Venezuela. Those are three very different stories, but they're all pointing at the same shift. Welcome to Ledger Prime. Let's dig in. Market check, guys. Crypto is opening 2026 higher. Bitcoin starting 2026 in the green. The price is hovering right around that $92,000 to $94,000 range, extending its year-end momentum rather than reversing it. Ethereum is trading near 3,200, holding recent gains as attention shifts away from short-term speculation and back towards network yield in ETF-driven flows. And guys, XRP posted the largest move of the session, climbing more than 20% to reclaim the $2.40 level. Albeit briefly, it went up from $1.79 a couple days ago, jumping to $2.40, marking one of its strongest single-day advances in months. But this next story tells you where crypto is actually being used. Walmart is integrating crypto into retail payments. It is quietly integrating a payment system into mainstream retail through its fintech arm, OnePay. Customers can now buy, sell, hold, and spend digital assets, including Bitcoin, Ethereum, and XRP. The OnePay app allows crypto balances to be converted directly into dollars for purchases, both online and in-store, using a simple barcode scan at checkout. Customers can also use crypto to pay down balances within Walmart's financial ecosystem. In parallel, Walmart has completed the rollout of Bitcoin ATMs across its U.S. supermarket locations, giving customers a physical on-ramp to crypto using cash. But from retail payments to revenue infrastructure, this next story isn't about spending crypto. It's about what crypto is quietly replacing. Because Avalanche is now powering real-time royalty payments for the music industry. Not pilot tests, not theory. Actual on-chain payouts, settling continuously. The system was launched by Record Financial, replacing traditional quarterly royalty cycles with real-time accounting and automated payments. In recent comments, CEO Travis Garrett said the platform treats music not just as creative output, but as a financial asset, complete with reporting, payments, and future financing tools. Avalanche was chosen for a specific reason. The network's low fees, high throughput, and fast settlement make it suitable for billions of micropayments every single day. So far, we've talked about adoption and infrastructure. The next story, though, is about control and what happens when crypto becomes a seizure asset. Because the US government is considering steps to seize the cryptocurrency assets linked to the Venezuelan state, following the recent capture of former President Nicolas Maduro on January 3rd. Officials estimate, and this is just an estimation, that Venezuela officially acknowledged Bitcoin holdings are relatively small, roughly 240 Bitcoin. However, unconfirmed reports suggest the existence of a much larger shadow reserve, potentially accumulated through oil and gold settlements since 2018. And guys, some of these reported numbers are upwards of 900,000 Bitcoin. All unconfirmed, but those are the rumors. US authorities are citing existing sanctions and criminal charges as the legal basis for potential seizure, similar to past actions involving sanctioned foreign assets, though international law experts have raised questions about jurisdiction. The key signal isn't the size of the reserve, it's that Bitcoin is now being treated not as an experiment, but as a strategic asset subject to enforcement and seizure. And now, onto regulation, and what may be the most important structural shift in crypto markets this year. Grayscale has begun distributing Ethereum staking rewards to shareholders of the United States spot Ethereum product. Shareholders of Grayscale's Ethereum product received 0.083178 cents per share, reflecting staking rewards earned between October and year-end, payable based on holdings as of January 5th. Until now, US spot crypto products avoided staking entirely due to regulatory uncertainty, despite staking being a core source of economic return for Ethereum. That changed after a recent guidance from US regulators clarified the treatment of staking rewards under securities and tax law, opening the door for compliant distributions. This move quietly changes what a crypto ETF is. Ethereum is no longer just a price asset in public markets. It's becoming an income-generating asset. So guys, here we had 5 stories, one theme. Crypto isn't just trading higher. It's being integrated, regulated, and enforced. And in the next couple days, we will break down each one of these stories into deeper dives and deeper reports. But for now, this is Ledger Prime.